Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Gail Vaz Oxlade. Gail is the author of the best-selling book, Debt Free Forever, and she's host of the TV show Till Debt Do Us Part. Gail and I are going to talk about Canada's debt problem.
Yeah.
Gail, we have a recession on, supposedly a recession, and debt rates are skyrocketing. What is going on out there?
They are. 84% of Canadians have debt, and our debt hit $1.3 trillion.
How is debt growing, and yet the economy is shrinking?
You would think that when times got tough, people would pull back a little bit, but apparently not. Apparently they have easy access to credit still, and they're shopping their brains out. You know, the economy is built on consuming.
It is, and part of it is built on consuming houses, and houses are selling very well,
yes.
And yet there's a lot of worry about the housing market. What happens when interest rates go up? How will we be able to afford these mortgages we're getting into? How worried are you about affordability of mortgages when
I'm
rates
actually
rise?
very worried about this from the perspective that a lot of people have qualified for mortgages that are very, very low interest rates, and now what's happening is as those rates go up, and they will, people think that, you know, where we are now is going to be where we are forever. It's not true. When interest rates go up, their cash flow is going to get squeezed. And that's going to push them back to their credit cards and their line of credit.
Gail, you advise people on their debt problems. What would you suggest people do to guard against a big shock when mortgage rates rise?
I think what you should do is calculate what your mortgage rate will be in the future and start setting that money aside now so you learn to live on less. And you sort of buffer yourself so when the rates go up, you're prepared.
So you prepare for it. You don't
Yes.
just wait and react.
No.
Now, Gail, we've talked about mortgage debt. There's all kinds. There's lines of credit. There's credit cards. What kind of debt worries you the most?
It's a toss-up between the credit cards and the lines of credit. Both are consumer credit. As far as I'm concerned, they're as bad as each other. It's just a matter of how much they cost.
Well, of course, credit cards cost a lot more, though, don't they?
Yes, they do. And so what you should be doing is you should be trying to pay off your most expensive debt. That's the debt with the highest interest rate. Get that paid off first and then snowball it. So once you get that debt paid off, take all of that money and put it to your next most expensive.
This is my last point, but it's that I think the problem is partially that we pay off one debt and we think, okay, I'm raring to go and take on a new debt.
Well, that's very often what happens. As soon as you get a clean credit card, you think you have to go out and rack it up again. Unfortunately, until we take care of the debt problem, we're not going to have enough money to save. And people aren't saving.
All right, Gail, thanks.
My pleasure.